One.
Hello and welcome everyone to the launch of our annual Future of Payments report. Delighted to have you all here today. My name is Lewis McClellan. I'm the editor of the Digital Monetary Institute here at OMFIF, and together with my colleague Katerina Liu and Taylor Pierce, we are the authors of the Future of Payments report. I'd like to thank you all again for joining us today, and we have with us Zain Saidin, the TASAT CEO. TASAT were one of the contributors to the report. We're sad to not be joined by Ayaspek, who also contributed to the report, but were unable to join the panel today. We also have Dong Hee, Deputy Director, Monetary and Capital Markets at the IMF, and Jennifer Fowler, a member of the Secretariat at the Financial Stability Board. Great to have you all with us today. I will give them a chance to introduce themselves properly in a moment, but first we are going to be going straight to a presentation of the key findings of the report, and that's from Katerina Liu. So we will be shutting off our cameras and mics for a moment and passing over to Katerina, and we'll rejoin you in a few minutes after that. Thank you.
Great. Thank you so much, Lewis. Thank you. And hello, everyone. And thank you for joining us for the launch of the Digital Monetary Institute's Future of Payments report, now in its fifth edition. I'm Katerina Liu, a research analyst at OMFIF, and it will be a pleasure for me to walk you all through the key findings today. So the Future of Payments report bases its findings on our third annual survey of 34 central banks, 21 coming from emerging markets, and 31 from developed markets. And this year's findings will explore their views and progress in upgrading cross-border payments infrastructure. The report will unpack their insights across 4 chapters, including multi-currency CBDC platforms, correspondent banking, tokenization, and fast payment systems. So to start us off, according to this year's findings, the #1 challenge affecting cross-border payments is the high cost associated with cross-border transactions. We can see this here at the top of the chart that, based on the light blue bars, transaction costs is the leading most challenging aspect of cross-border transactions, selected by 29% of respondents. And when we factor in all top 3 choices, the light blue, the dark blue, and the gray bars, transaction cost is a challenge for 68% total of all respondents. In a separate survey question, 30% of respondents have stated that they are most focused on improving transaction costs. However, throughout this report, we will examine the range of projects and innovations that central banks are working on to improve on the range of challenges listed here in the chart related to cross-border payments. One of the causes of high transaction costs stem from the high costs in providing compliance checks for cross-border payments. The type and format of the information collected in Know Your Customer checks, adhering to anti-money laundering and combating the financing of terrorism standards, these vary by jurisdiction, and it is expensive to bridge all of these gaps. The high costs are beginning to drive banks out of correspondent banking, which may potentially worsen consumer outcomes. And as such, it will be important for institutions to explore ways to bring down transaction costs to avoid this decline. The adoption of ISO 20022 standards aims to help with this challenge. However, financial institutions will have to implement the standard by a deadline on November 2025. However, not all central bank survey respondents expect to meet this implementation deadline. Overall, 66% of respondents will have between 90 to 100% of payment service providers in their jurisdictions use ISO 20022 by this deadline. This is broken down here in the chart into 82% of developed market respondents, shown by the light blue bar, and the 56% of emerging market respondents, shown by the dark blue bar. Among emerging market survey respondents, 44% expect to have 89% or less of their payment service providers using ISO 20022 standards by November 2025, which we can see here by summing up the remaining dark blue, the shorter dark blue bars. Ensuring competition in the payments industry is a key aim for policymakers. A more competitive marketplace should lead to improved user outcomes. But as costs rise, banks are reducing their footprint in correspondent banking, particularly in emerging markets. Encouragingly, the survey indicates that central banks are intending to broaden their access to their systems beyond the banking community. Seen here by the top bar, where 41% of respondents already give access to non-bank payment service providers, and another 44% intend to do so. However, willingness to expand access beyond borders is much less widespread, as indicated by the gray portions in the following 3 bars, demonstrating that most respondents do not presently have plans to give other central banks, foreign banks, and foreign FMIs access to their RTGS systems. Central banks are also exploring other innovations to improving cross-border payments. The various avenues can be seen listed here in the y-axis of the chart, including interlinking faster payment systems, connecting CBDCs, interlinking RTGS systems, harmonizing formats, aligning regulatory frameworks, DLT infrastructure, and stablecoins, some of which I'll explore in further detail throughout this presentation. Most notably, as seen here in the top of the chart, interlinking faster payment systems remains the most promising avenue to improve cross-border payments for survey participants. Both in last year's and this year's survey, indicated by the light and dark blue bars, 47% of respondents have selected interlinking faster payment systems as their choice. This demonstrates the growing importance of faster payment systems, where around 70 countries globally have one in place. Successes in experiments such as the Bank for International Settlements Project Nexus, which aims to provide a scalable solution for interlinking these systems based on a hub and spoke model, have also led to positive views on this avenue and provides a promising path to scalability. Despite the promise of interlinking faster payment systems, this endeavor has introduced new governance challenges. When there is a failed payment or any issue with the payment, the dispute resolution process is governed within the central bank's jurisdiction with their own rules and legal systems. This chart here demonstrates that legal and regulatory frameworks and technical infrastructure alignment are the clear top 2 concerns for central bank survey participants. 44% of respondents see legal and regulatory frameworks as the biggest potential barrier, where 55% of developed market respondents selected this option. Whereas 31% of survey respondents chose technical infrastructure alignment as the biggest potential barrier, including 38% of emerging market survey participants. Experiments such as Project Nexus will need to provide a robust governance solution to address these barriers in order to address payment finality and the treatment of fraudulent transactions and correcting errors. Among the other most promising avenues listed in the Future of Payments survey for improving cross-border payments, connecting CBDCs is becoming a less appealing option for central bank survey respondents. When surveyed on this question in 2023, 31% of respondents selected this option as the most promising avenue. However, when asked the same question this year, the figure declined to only 13%. Despite efforts from projects such as Project Enbridge, a multi-currency CBDC platform, and Project Agora, which seeks to create a platform for wholesale cross-border payments that will include tokenized wholesale CBDC, this decline might reflect a growing awareness of the challenges involved in these projects, such as achieving technical alignment and developing shared governance structures. However, the decline does not mean that CBDCs are being ruled out. The survey question asked on the most promising avenue to improve cross-border payments, and the survey findings also imply that many central banks are still inclined to issue a CBDC, where many respondents have commented that they are in various phases of exploration and research. In terms of multi-currency CBDC platforms, while only 10% of survey respondents are presently working on a multi-currency CBDC platform, as shown by the light blue slice, about a quarter, 26% of them intend to do so, shown in the chart by the gray slice. Project Enbridge is a notable example of such research, led by the central banks of Thailand, the UAE, China, Hong Kong, and Saudi Arabia, also including 32 observing members up to the project as of August 2024. In addition to potential innovation and increased efficiency in cross-border transactions, the platform also aims to promote the use of local currencies for global payments. Interoperability is also another aspect of CBDC development that central banks are still considering and is important to the discussion around connecting CBDCs. For now, it might be too early to tell which interoperability model might be adopted. However, based on our survey findings, 45% of respondents favor the hub and spoke model, as shown here in the top bar in the chart, where a common hub connects CBDC systems from participating jurisdictions and could offer a model for the global connectivity of a more deeply integrated regional systems. The second bar here shows that compatibility is the second preferred option, which involves using common messaging format standards, cryptographic techniques, and data requirements. And we explore the survey respondents' views on the rest of these models listed here in chapter 1 of the report, so we invite you to view those there. Tokenizing cross-border payments might be a way for central banks to streamline compliance checks and improve settlement efficiency. In this chart here, 76% of respondents each, as seen here by the first two leftmost bars on the chart, envisage wholesale CBDC and tokenized deposits to operate in a tokenized ecosystem. This suggests a clear endorsement of the two-tier model of money provision. While it may possibly be simpler to implement as a domestic model, when factoring in cross-border payments, the hurdles involving establishing a common platform containing multiple CBDCs and commercial banks and shared technical infrastructure might prove to be challenging. Overcoming these hurdles would require a consensus on the governance of this platform and the technical alignment for institutions to be able to share a common infrastructure. As such, while 96% of respondents see the potential behind such projects, only 15% of respondents are presently working on combining tokenized bank money and tokenized central bank money on a programmable platform. While 33% of respondents intend to work on this project in the next 3 to 5 years, a greater share, 48%, do not intend to work on such projects for at least 5 years. When it comes to private sector involvement, in the tokenized ecosystem, central bank survey respondents are far less certain. Much like the survey results from 2023, 0% of respondents chose stablecoins as the most promising avenue for cross-border payments. However, central banks still do acknowledge the benefits that stablecoins may bring to improve cross-border payments. As seen here in the chart, reduced transaction fees and improved speed are the two areas where stablecoins might make the biggest difference in improving cross-border payments. Which benefits central bank survey respondents find the most appealing does differ, where 40% of respondents from developed markets find reduced transaction fees far more than the 21% of emerging market respondents. So, to conclude the presentation, our survey for the 2024 Future of Payments report has found that central banks strongly favor interlinking faster payment systems as the most promising avenue to improve cross-border payments, where 47% of survey respondents, both last year and this year, selected this option as their choice, demonstrating the growing importance of this technology. Despite potential barriers, where 44% of survey respondents saw legal and regulatory frameworks, and 31% of respondents saw technical infrastructure alignment as the top barriers to interlinking faster payment systems, experiments such as Project Nexus has shown positive results and provides the promising path to scalability. Connecting CBDCs, however, has become a distant choice for respondents as the most promising avenue. We have seen this based on the decline in respondents who selected this as an option from 31% of respondents to this year's 13%. Awareness to challenges around technical alignment and developing shared governance structures in addition to coming to a consensus on an interoperability model, might have contributed to this decline. Despite that, central banks are still aware of the promises connecting CBDCs hold and continue to explore and work on CBDC projects, such as the 10% of respondents presently working on multi-currency CBDC platforms and the 26% who intend to do so. And finally, the appetite is set to grow for tokenization projects. Our survey demonstrates a strong endorsement by central bank respondents in the two-tier model of monetary provision, where 76% of respondents envisage wholesale CBDC and tokenized deposits each to operate within the tokenized ecosystem, at least on a domestic level. Multiple challenges around the governance and technical alignment may need to be overcome for this model to be implemented for cross-border payments. 96% of survey respondents see the promise behind such an ecosystem, but it may seem that central banks are holding back on pursuing such projects for now, where only 15% of respondents are presently working on combining tokenized bank money and tokenized central bank money on a programmable platform. The place for stablecoins in the tokenized ecosystem is far less certain for now, where none of survey respondents saw this as the most promising avenue for cross-border payments, but the benefits, such as reduced transaction costs, transaction fees, and improved speed still hold some promise. And now I'll thank you everyone for listening. I'll hand you all back to Lewis, and I encourage you all to download the report to explore further in depth these themes that we've just discussed today and that we will discuss in the panel using the QR code shown here from the links provided with the event. And with that, I'll hand you all back to begin the panel discussion.
Thanks, Katerina. That was great. Yes, I hope you all found that interesting. A lot of detail in there. So if you want to go into it in more depth, much easier to do so in the report. Well, let's get into the discussion then. As I said, I'll give the panelists a chance to introduce themselves. Jennifer, can we start with you, please?
Oh, thank you. And thanks so much for inviting me to join the panel. I'm looking forward to a great discussion. I'm Jennifer Fowler. I'm a member of the Financial Stability Board Secretariat. I work predominantly in cross-border payments. So I support the work the FSB does to coordinate and implement the G20's roadmap for enhancing cross-border payments. And I also support the work the FSB has done on looking at the financial stability implications of tokenization.
Fantastic, thank you. Zain, can we come to you, please?
I'm Zain Said, and I'm CEO of Tacit. We are a software company in the US that provides software and services so that banks and financial institutions can provide tokenized deposit solutions for settlement and payment. 25, we're going to be rolling out a cross-border and FX version of our product. And therefore, we're super interested in working with you guys on how best to roll that out.
Fantastic. Yeah, well, it'll certainly be coming up today, I'm sure. And Don, finally, let's come to you, please.
Thank you, Louis. I'm Dong He. I'm Deputy Director of the Monetary and Capital Markets Department of the International Monetary Fund. So I have oversight responsibility for the IMF's work on digital money and the fintech issues. And we are also working very closely with the FSB Secretariat on enhancing cross-border payments. So I interact with Jennifer very frequently, and we are key part of that group as well.
Fantastic. Thanks, Don. So we'll just get into the questions for a moment, but can I highlight to the audience, some of you have already made use of this, but you have a Slido panel where you can ask questions, and those will be fed through to us, and I will bring them in when I can. We have a couple of questions to get through first, but I will certainly bring in the audience questions when possible, so please do make use of that. Don, let's start with you. As we saw in the key findings from Katerina there, there's various problems that central banks have with cross-border payments, but cost is the biggest one for them. Can you talk a little bit about what the main components of that cost are?
Thank you. I think I would congratulate you on your survey results. I'm particularly happy that you actually have a good representation from emerging market central banks. Another key source of information is the KPI report, or key performance indicators report of cross-border payments published by the FSB in October that really provides a very comprehensive picture of the cross-border landscape. As you can see that, across different market segments, that's wholesale, retail, and remittances, we have various indicators. On the wholesale segment, we don't have a target under the G20 roadmap for wholesale payments, but we do have targets for retail and remittance segments. And here you can see that one, of course, important achievement is the publication of these indicators. So we have a good understanding of the picture now globally. Previously, before 2023, we didn't really have much information. And what you can see here is that there was quite a lot of heterogeneity across different segments of the industry, but also across the regions and individual countries. Unfortunately, in the retail segment, we are talking about B2B, B2 government, B2G, B2C, and all these retail segments. None of the segments really has met the target of 1% global average, and that's a picture, I think, that explains some of the importance that central banks place on the cost issue. And of course, in the retail segment, in the remittance market, we have had more data over time. And here, the cost is still more than 3 times, or is still more than twice of the target of 3%. Is on average 6.4% for a $200 remittance transfer. Now, what explains these costs? I think there are 2 important factors in my mind. One is compliance cost. So given the heterogeneity in regulatory and supervisory frameworks, in how it's not easy to make a payment across borders because the service providers do incur a lot of cost in ensuring that there is compliance with the relevant regulations such as AML, anti-money laundering and combat of terrorist financing regulations, but also issues with, for example, capital controls, what we call capital flow management measures in the fund. That's actually quite prevalent still in emerging markets and developing countries. So that also could be an important factor in raising the cost and maybe reducing the speed. Another important factor is the foreign exchange component of the cost. And of course, as you know, cross-border payments often require conversion of currency. It's not only cross-border, but also cross-currency. And for less liquid currencies, that could be quite an important cost component. And that cost component reflects, of course, maybe liquidity issues, but it also could reflect the industry sort of structure. For example, if these cross-border payments rely on correspondent banking relationships, that typically favors larger banks, which have capacity in their balance sheets to make positions for foreign exchange services, right? You require large balance sheet capacity to do that. So that favors concentration. So there may be market power issues, and there may be settlement issues. Settlement risk can still be an important consideration. As you know, the foreign exchange markets in the major currencies handle settlement risks through, for example, continued linked system CLS bank that has 18 currencies in it. So many other currencies are not in that. So we still, globally in the foreign exchange turnover, we still have, I think, around 1/3 of the trades that are not settled on the PVP basis. So there are still a lot of settlement risks. So all these feed into how foreign exchange services are provided and the cost. So it's a complex picture here, but some progress has been made. I think it takes a lot of effort to get these problems understood. I think we have made quite a lot of progress, but implementing some of the recommendations globally would also take some time. So let me stop here, and I'll come back later, on some of the solutions so we can talk about. Right? Thank you.
Yeah, thank you, Dong. It is, as you say, a complex picture, and you've covered a lot of important ground there. I guess the only thing I was going to add is when you talk about some of the things that I heard a lot when I was doing the research for this report is that the FX component is a significant cost, but also because of a lack of transparency can be kind of used to hide other costs as well, or other costs are sort of embedded within that. Yeah, a lot of different you've touched on a lot of different problems, and a lot of these have different solutions, and that's kind of what we were trying to evoke with the theme of this report, the sort of many paths, one goal, because as you say, this is a problem with a lot of different faces. Jennifer, I wanted to come to you there to see what you might have to add on the costs, and particularly perhaps on the Dong mentioned the AML and CTF, generally the compliance checks and ways to address that in particular.
Right. Well, I completely agree with Dong's sort of summary of the various drivers of the cost issue. I think it's important, though, to keep in mind while the G20 roadmap sets out, it sets out some very clear objectives in terms of speed, cost, transparency, and access. But another goal is to keep payments safe. And so when we talk about AML, CFT, and compliance costs, we often talk about them in terms of frictions in the system. But that has a negative connotation. And we know there are inefficiencies in the system regarding how AML, CFT, and sanctions are implemented. But they're also important, elements that the roadmap is designed to bring. We want to bring greater efficiency, and we want to bring, greater security for payments. So that, as a starting point, is we need to keep that in mind. So it's not to eliminate, all of those frictions. Some of those frictions are important. But what I would say is we have really undertaken a lot of work focused on the various aspects that Dong mentioned. When we think about, he mentioned, some of the costs associated with AML CFT really stem from in sort of an uneven landscape for a playing field for banks and non-banks that are payment service providers. We have just undertaken, a year of work on this and are, about to publish recommendations for sort of policy recommendations to address this issue. One of the main issues here is that when banks and non-bank financial, payment service providers are not overseen in a similar way, it makes the AML CFT implementation and sanctions implementation very complicated. So that's one of the things that our recommendations are going to try to address. And so we're hoping to publish those by the end of the year. Another important element here is really data and data frameworks. And when we use the word data frameworks, we're talking about all the various laws and regulations and rules that govern how data can be shared and used in the financial system, but also how the laws and rules that have to be complied with for AML, CFT, and sanctions purposes. Sometimes payment service providers find themselves with conflicts in those laws, and it creates inefficiencies in the system. So similar to the bank and non-bank supervision project, we have undertaken a year of work on data frameworks to try to understand how could we potentially harmonize those. And the ISO 20022 issue is one of those issues that's covered in our recommendations. But we've undertaken this work to try to figure out, well, how can we bring greater alignment and efficiencies while protecting data privacy, while upholding the data privacy and protection principles that are really important globally, but also improving how data can be accessed and used in the payment system for AML, CFT, and sanctions implementation. So that's also an ongoing piece of work. And then we can talk a little bit more about the details of this, but I mean, the other issue that you just mentioned, Louis, is the transparency issue. And I mean, we know that greater transparency for consumers is important for consumer protection, and that they understand what the fees are, but it also supports competition in an efficient marketplace, and that can drive down costs. And so that's another focus area for us, is really how can we bring greater transparency we've just undertaken a partnership with the G20 and OECD Financial Consumer Protection Task Force to try to develop some best practices and guidance in that area. So that'll be another, important focus for us in the coming months.
Fantastic. Thanks, Jennifer. I think, your point about, these frictions are, it's not just for the sake of it, right? Like it's not something that can or should necessarily just be removed. And I think you're making the point with compliance checks, but obviously capital controls, those are policy decisions, right? It's not like, yes, it might slow down the movement of money, but that's a decision made by an official institution in many cases. So not necessarily something you can just get rid of. I want to shift gears slightly because we've got a couple of questions coming from the audience on the topic of tokenization. And not a surprise, right? That is certainly the topic kind of on everyone's lips this year and maybe last year to an extent as well. Zane, I want to come to you on this point. Well, there's a few different ways we can tackle this. One thing that interests me, and you might have a perspective on, is the result that we got in the survey, where when asked about their top choice for improving cross-border payments, central banks, none of them said stablecoins, despite the fact stablecoins are out there working already. But they're not perfect, and I wondered if you might have a perspective on where stablecoins might be deficient versus how they are versus tokenized deposits and new ideas on how to tokenize different forms of money.
Got it. I'll try to answer the several questions that are in there. But the first one I'd probably pivot off of is something that Jennifer was saying. Regardless of the technology that's used, regulatory clarity needs to happen, needs to be uniform and well-defined. Implementation with whatever underlying technology layer has to stay subordinate to necessary regulation, like everybody said, capital controls, anti-money money laundering, and all of those sorts of things. Stable coins show what I believe to be the way, but because they're not issued by any commercial bank, because they're a fintech concoction, they're currently operating sort of parallel to the rest of the system. And while they're demonstrating all of the efficiency and technology gains you can get from tokenization, they need to be brought into the regulatory framework of the planet's central banks. And whether that's done with a standalone stablecoin or with tokenized deposits from large banks or even wholesale CBDCs is an implementation choice. But the path is, to us, pretty clearly some sort of tokenized deposits or underlying asset provides an excellent way to streamline the process, because blockchain and blockchain technologies offer a lot of ways. The stablecoin providers are demonstrating the efficiency of a system built that way now.
Yeah, I think that's a great point, and there's a few points in there that I'd like to come back to. But before I do, we have a question from the audience asking if tokenization of deposits has the potential to substitute for retail CBDC going forward. Do you have a perspective on that?
I think you get into sort of a terminological discussion at that point, like what is a retail CBDC and did anybody actually ask for one? Our view is that wholesale CBDCs probably have some place in the future, but anything like a retail CBDC, probably most consumer bases are not interested in. Our technology is for corporates, right? For large corporations to do settlement operations and payment operations with each other, either in the U.S. or for a multinational across the world. And tokenized deposits offers a lot of ways to improve that process. But I don't believe somebody is going to go buy, food at a grocery store with a retail CBDC. I don't think the consumer market is after that, and I don't think that most central banks are headed that way.
Thank you. And that actually contains within it the answer to another audience question: why do we need CBDC? Have customers or citizens asked for it? I suppose we can break that down into wholesale and retail CBDC, though. And Zane, you've given a good, compelling answer on the retail side. But Dom or Jennifer, maybe you might like to jump in on the wholesale CBDC side as well, if you, yeah.
Sure. So I think the question whether you need a retail CBDC, I think that answer actually differs from country to country, right? So in the many advanced economies, the payment systems are well developed. You probably don't have a lot of pain points, whereas in some of the developing economies, maybe there are no other digital solutions exist. So retail CBDC can still play a role. So I think in the decision to consider whether wholesale CBDC or retail CBDC or whether CBDC is needed at all, I think it's not only the current pain points that central banks might help address. It's also future forward-looking type of exercise. You have to think about how the industry will evolve in the digital age and what's the payment landscape is going to look like in 10 years' time. Would that affect the demand for central bank money? So that's an important part of the consideration, right? It's sometimes when we say whether there's a retail demand for it, but there's also public policy consideration here in the sense that central bank money does provide an anchor role in the monetary system. So even if it's not used too widely, just like cash is not necessarily widely used, it still plays a very important anchor role in the payment system. So we can envisage the coexistence of tokenized central bank money, either be it in the retail form or the wholesale form, and other private solutions in the future. So I think the path will be different in different countries. How each central bank would react currently, but in the future, I think it's possible to envisage a multi-railed landscape that has a different combination of all these. And I think resource constraints will often also shape how central banks pursue these strategies.
Certainly, yes, I think that's a very good point. And I think that is supported in our survey. I think something like 76% of respondents said yes to both tokenized deposits and wholesale CBDC operating at the same time. Retail CBDC was a bit lower, I think in the late 40s or 50s. But I'd like to get into this idea of the coexistence of wholesale CBDC and tokenized deposits, because that is the central proposition of Project Agora, which is the BIS and 7 central banks exploring that. I'm not going to try and list them from memory. Yeah, Jennifer, I'd be interested in your perspective on that. Can you talk a little bit about having these two forms of tokenized money on the same platform and what they both offer, and why is one not redundant if you have the other?
Well, I can't speak directly to Agora on behalf of the hub, but I think the exploration of a project like Project Agora is just really important to test out what the possibilities are. And what you see is enormous interest in this project. There are 40 plus financial institutions involved. Obviously, there is a lot to work out with that many parties involved. But I think it's the same, potential benefits that we explored in our paper on our paper on looking at the financial stability implications of tokenization. We obviously looked a lot at, what are the purported benefits here, the efficiencies that you could potentially achieve with atomic settlement, and the potential to achieve that is something that, I think Agora wants to try to test out. So in terms of that project, I think the most important message is just the interest and the willingness of so many participants to come on board and try to figure out if that can work.
Yeah.
So maybe I can chip in just to share a brief additional perspective here. I think in a way the coexistence of tokenized deposits and wholesale CBDC is very easy, sort of natural to understand, because that's just to some extent the replication of what we have now, right? The two-tier system in a tokenized form. So what you can do is that you can envisage that customers would initiate payments using tokenized deposits, but when these interbank payments are settled, they have to be done in central bank money. That's what is actually happening now, right? Is transfer of reserves on the books of the central banks. And in a similar vein, in the future, it will be wholesale CBDC that will be used to settle interbank payments. So that's it's not that difficult to understand why they both are needed. But I think Project Agora might have another important contribution here if the experiment is going to be successful. That is to think about, we talked about these compliance complexities. At the moment, they contribute to cost because each institution in the payments chain has to do it, has to repeat that. So in the future, can we think about using technology to simplify some of these procedures? So the point here is not to diminish the importance of ensuring financial integrity. It's rather, given the sort of the requirements, can we use technology to enhance the efficiency of implementation, right? So Project Mandala of the BS Innovation Hub has done some very interesting experiments on these issues, how to use technology to automate some of the compliance checks. So if these projects, together with other projects, the experiment you mentioned, Enbridge earlier, all these projects would contribute to a better way of achieving, I think, a balance of these objectives. It's the cost, speed, and also integrity. I think we will be in a better state of the world when we use technology to, if you like, to push the frontier a bit further, and we can have both lower cost, faster speed, and better integrity. AI would be another tool that will be very useful for us to detect anomalies and all that. So that, I think these experiments are very exciting, but I do want to say that it's going to take some time. I think we have to be patient. We track these indicators 1 year from 1 year to the next, but all these efforts will take a lot of time for them to show results. So we have to be patient as well. I think that's something I would like to add. Thank you.
Thank you. Zane, I think that's a good point to throw to you. Dong has talked a lot about the potential benefits of replicating the existing system, but in a tokenized environment. Can you talk a little bit more about what that is, and I guess particularly in a cross-border environment, why you think it can add value?
Yeah, well, I think Dong touched on it very well, actually. I think replicating and modernizing or tokenizing the current system is the way this needs to go. I think in the world of tokenization, there's a lot of talk of disruption, but I don't believe disrupting money is such a hot idea. The advantage of what he's describing is that in that second tier, in the commercial bank or other financial institution layer, you can start to imagine solving problems of a wide range of ways. Settlement where the underlying asset is a tokenized deposit, settlement or payment where the underlying asset is a tokenized money market fund or a treasury fund, a situation where a corporate could have a tokenized pool of money market assets in one country and settle with itself and all of its entities around the world in a tokenized representation of that, where the underlying asset doesn't have to move at all. And when it does have to involve multiple nations' currencies, it can pop up to the central bank layer and solve the problem. And with tokenization, it's possible to build in smart contract. It's possible to make the money intelligent in a way that can be watched and tracked and reported as necessary. And if we build that in from the beginning, we can start to remove some of the pain and friction points around AML and other cost drivers or time drivers of the system. right? We don't have to upend the whole concept of money, but we can modernize it.
Yeah, absolutely. Very well put. At the risk of us sounding too optimistic about all this and too positive, I'd like to ask about what some of the challenges facing that make implementing something like that difficult are. We saw, I think it was actually a question about Project Nexus, but I think the same thing applies, right? The biggest challenge that central banks see for improving cross-border payments generally, I think, is harmonizing legal and regulatory frameworks. And it's we can talk about this new technology, but if it were easy to do that, in a sense, we probably would already have done it, right? So, Jennifer, I'd be interested in your views on that. Maybe what is the process like to go around building that consensus?
Well, I mean, as you say, it's the same issue when you think about a tokenized environment versus the traditional financial system. Really and truly, it's the same complications of different jurisdictions, different regulatory frameworks, different supervisory expectations. And add on to that now with tokenization, the interoperability issues that exist between platforms or between a tokenized platform and a traditional financial institution. So those interoperability issues are one of the main challenges we've seen in terms of the potential for tokenization to grow and why it has not grown very much. But this harmonization or alignment of regulatory expectations and basically the question of who has the responsibility to do what on AML, CFT, and sanctions implementation across the platform, and how can we sort of have governments feel comfortable that those things are being taken care of. It's just, I think the possibilities there are to reimagine things, and as Zane has said, to use technology to really bring efficiencies, but it doesn't come without risk. And so smart contracts, for example, do offer those potential things, but they also introduce automaticity and sort of a speed into the system that maybe creates, financial stability implications and vulnerabilities, which is something, we covered in our report. So I think for me, it's really a question of the same issues, in the current system, sort of magnified in a tokenized system in a way that there's opportunity, but there's also risk, and it's difficult to find that alignment because the interests remain the same.
Yeah. The interests are all very, very aligned. I agree with Jennifer. It's speaking from the company with coders that have to interface, do code that interfaces to legacy core banking systems and the tokenized layer of the world. While it's work, companies like mine and all the other fintechs in the space can do it. We just need to know what rules we're playing by and who we should interface with. It might be that the challenge in front of us is the need for a centralization of the KYC, AML, and other capital control systems. Our technology provides real-time visibility and connection to every transaction of the trillions of dollars that have happened on our systems. But we feed that mostly to banks' existing systems. If there were governmental structures for that were centralized and had a clean, clear interface, my company and all the other companies could simply code to it and everything would run, right? Whether we were doing a tokenized deposit or somebody was using a tokenized money market fund to settle something, or a stablecoin provider was transacting between two of its customers. Right. Yeah. Right now, the blockchain DLT technology community has a whole plethora of places we're supposed to interface with to provide the data to do an AML check, but the rules vary and the implementations vary and the results, frankly, vary.
Yeah, it does seem like the conversation has changed a lot over the past few years because there were technical problems that needed to be solved, and a lot of them have now been solved, and now it's a question, as you say, Zane, of making sure that the rules are coherent and uniform and make sense and are clearly understood. Dong,
If I could,
please.
oh yeah, just to take it out of the tokenization world, and just to come back to the work that we've done on the data frameworks issues. I think what Zane is describing is exactly the data frameworks work stream that we've had underway. It is true, we hear more than any other friction, we hear about AML, CFT, and sanctions. And as I said, those are important frictions to keep in the system in some ways, but there really are inefficiencies. And what we've tried to do is look at, how can we better sort of align across jurisdictions. What we found, we conducted a stock take last year. What we found is really, although there are clear rules and standards, every jurisdiction tends to implement or interpret them or enforce them in different ways. And that is what really is challenging for payment service providers. And so part of what we've done is try to figure out where are those pain points and where is alignment possible. The Financial Action Task Force has undertaken, a major piece of work to update their recommendation 16, which basically spells out what pieces of data need to be in a payment for AML CFT purposes. It's also relevant for sanctions. That work, they have really done incredible work to engage with the private sector and understand the points of view there, and it's ongoing. But I think that's an example of really concrete work to try to figure out how to give better guidance and give better consistent standard to countries and then ultimately to payment service providers to try to eliminate some of these inefficiencies. But that's still in the traditional financial, that's not even getting to the possibilities that Zane has outlined. So we still have a lot of work to do, in the existing financial system.
Yeah, I think that's a really good point. Well, as you said, it's the same problems fundamentally that need to be solved. But just before we move on from this, it might be good to hear about kind of the intersection of the technology and those problems, right? Like the problems might be the same, but does using a new form factor actually provide new methods to address the old problems? Don, please. Yeah.
Yeah, I do think so. I think there is a room to streamline some of the compliance procedures without sacrificing the requirement, right? So, for example, you can, as Jennifer said, first maybe effort is to standardize the data that are necessary for these compliance checks. The other one is that you can think about the use of smart contract to encode some of the already authentication that's been done, and then you would know whether this particular transaction has already gone through this, so you don't have to do it again. So these efforts are all ongoing. But let me just throw one additional complication to all this discussion. That is, when we talk about cross-border payments or cross-border transfers for assets, for international finance, we are talking about relationships between sovereign nations, right? So that's a we don't have a world government here. We are talking about how countries come together. So when you talk about governance of these platforms, that includes not only how decisions are made, the voting powers. It also has to do with the rules of these platforms regarding, maybe really the who, what, and how of international finance, in the sense that who can participate in these platforms, what type of assets can be traded, in terms of capital flow management measures, how frequent or what's the nature, what's the purpose of these transactions. So all these have to be agreed upon. Do we give one member one vote? Do we have majority voting? All these issues. Think about how the Bretton Woods system actually came about in 1944. We are celebrating the 80th anniversary of the Bretton Woods institutions. We have the widest members of these days. We have in the fund we have 191 countries. But when the fund was founded by the Allied countries in 1944 in Bretton Woods, it was 44 countries, and it was tough negotiation in terms of the governance of these institutions, right? You can similarly think about these new projects. So I think it would take concerted effort But it's our hope that countries will come together. In the end, I think that's really for the benefit of everybody in the community, in the global community, particularly for those countries that really do not have very smooth access to the international financial system at the moment. We are talking about smaller developing countries. Many of them are at the risk of being cut off completely. So these are serious issues that we hope will, these new experiments will certainly bring some hope for us to have a continued and integrated global payment system.
Yeah, absolutely. Well, that was kind of what I was thinking of when I asked the question. Bringing the sovereign nations together on this, and that's certainly what we heard, particularly on Project Nexus, which you may remember in the findings presentation. That's been 2 years in a row. It's been the top choice by the central banks that we survey for what's going to improve cross-border payments. And the same thing applies, right? Addressing governance challenges. They're in an interesting situation where you're sort of building it out slowly. So there's 5 countries in Southeast Asia, and it feels to me like if you join early, you're going to have more of a say in setting the standards than if you're the 6th member to join, you're going to be able to do more of that work than if you're the 26th, say. So it does feel like we're going to run into this problem of well, I guess it's harmonizing data frameworks and is a big part of it, as Jennifer was alluding to. Just before we move on Project Nexus, do you feel like there's anything particular there that well, it looks particularly promising or otherwise? What's your exposure to that? To anyone else?
Yeah, maybe let me start, and certainly, hopefully, others can chip in. I think certainly Nexus is, as your report shows, that interlinking fast payment systems is a sort of one of the most popular things that central banks are thinking about. So the Project Nexus is a very good example for how central banks can do it. I think it starts with a very coherent group of central banks in ASEAN. I think that's a very good way to go about it, right? If you have a very large group in the beginning, it's probably very difficult to reach agreements. So I think the challenge here is to have a group of like-minded countries which are very connected from in terms of trade and financial flows. If they can agree on a common set of rules and governance, and then that would get the project sort of off the ground. But in order for them to grow, for others to join, to realize the network benefits of these platforms, then I think these rules, these platforms should be open, right? So from a global point of view, from the fund IMF's point of view, we certainly hope various projects, it's understandable they have different groups to start with, but when they scale up, we certainly hope they will be interoperable, they will welcome new members, and in the end, these will be open and interoperable networks. So that would be ideal, because then we don't end up with a fragmented global payment system. So I think in a nutshell, I think it's understandable that different projects have initial groupings to deal with these governance challenges, but eventually we hope that they will be able to scale up. We have to have as wide a membership as possible, to be very inclusive, and to have an integrated payment system.
I wanted I think that's an excellent point. Just sticking on, well, one thing I wanted to ask Zane on this actually. Project Nexus is looking to create a retail or a network of interconnecting fast payment systems. They're not using DLT or blockchain for this, and I wondered if you could talk a little bit about what the trade-offs are there. One of our survey results directly addressed, what the central banks feel like DLT or blockchain is going to be used in payment systems, and overwhelmingly they are unsure. That is the very, very strong result. There are more yeses for cross-border payments than for private sector domestic payments, or anything like that, or central bank domestic payments. But overwhelmingly it's unsure. So I wondered if you could speak to the unique value of DLT versus other types of systems for cross-border.
Right. I mean, I think it's important to remember that whatever database system you elect to use, that's an implementation choice. And a DLT system or a blockchain-based system is one of the possible databases somebody could build upon. It's very good at certain things and less good at others. And this is just a set of trade-offs. So there's no reason to get religious about tokenization or anything else. It's just a question of what's the feature set that gets the job done. The advantages of doing things in a tokenized form is, of course, that you have a unassailable ledger of what happened, and you have the ability to build in some intelligence into the transactions themselves. And those things seem important to us if we're talking about transactions and money. So we believe that DLT technology has a place. In fact, it should start to win. But to pivot off of something Dong said, it's going to be a competition, right? There should be a competition for ideas and implementations, both a competition in regional regulation, if you will, and a competition implementation. If you had to connect all of the various fast payment systems at a retail level right now, you'd probably do it with a messaging format, and I'm pretty sure that's what Nexus is going to do. It doesn't have to involve a DLT in order to be interoperational or anything like that. The question of implementing it on a blockchain is, where do you want to go next? Because if all you're doing is connecting a bunch of existing systems with another messaging layer, what you recapitulate is those existing systems. They have all of the same players with all of the same steps and all of the same costs. It might be a little faster because it's computerized, but every one of those players is going to need to take its cut. It's going to need to fund its staff. You don't necessarily improve the system that much by taking just an interconnectivity step. But if you want to get something implemented now, good way to go. Might be the way to go for certain choices.
Yeah, I think that's a really good point. Thank you, Zane. Jennifer, anything you wanted to add on that?
No, just to say that, I mean, when we looked at tokenization, we decided to look specifically at DLT-based tokenization, and that was because that's where we see the most investment in the private sector. And so when you're thinking about financial stability implications, that seemed like the right place to look. I mean, and I agree with Zane, we don't need to be so religious about it, but, it is important to understand when you think about DLT-based tokenization, sort of the various governance sort of, and I know governance maybe isn't the exact right word for DLT, but when you think about permissioned or permissionless platforms, what are the various pros and cons there, and the various ways they might be used? And that's an important starting place to understand how there might be issues that arise in the financial system or the vulnerabilities, and we did see some of that when we looked at those types of governance questions. Another important thing to think about is just the availability of information when we think about the different platforms and different forms of DLT and what it offers. And in some cases, we would have more information about what's going on in the market, and others will have less. And so for us, we think about financial stability and we want to be able to monitor what's going on. That's an important aspect of DLT to understand.
Right, exactly. I mean, you can implement it any number of ways. I mean, it's obviously been implemented in ways where nobody's in charge of a transaction being authorized. It's sort of a community. We've implemented it in a way where it's very clear who's in charge and who can authorize a transaction to be on the record. And that's again an implementation choice that should be selected for the task at hand.
I think all that is very true. The survey result given that central banks are so unsure of this, it seems to me like they don't have a good vision of what those trade-offs are or what best suits their policy needs. And I imagine that varies from central bank to central bank, and maybe this reflects that they're not sure which kind of argument is going to win out rather than what is offered by each side. But it does seem like this debate is quite a long way from being settled for them.
I agree, and unfortunately, I think the problem is that DLT, the technology, got conflated with cryptocurrency, the product or service.
Yeah.
And it gets very hard for people to disentangle the two, but they are distinct things. Sorry, Don, I interrupted
Please
you.
don't.
No, sorry. I just want to add that I think the industry is telling us that cash on ledger could be an important consideration if you want to scale up tokenization more in general, right? So we need a safe settlement asset. So for large financial market transactions, the ultimate settlement asset is central bank money, so I think there is a question, for the central banks to think about: do they want to use wholesale CBDC as a catalyst for broader tokenization efforts? Or they react the other way around, in the sense that they wait for the industry, and if they see tokenization is taking off, then of course they have to be part of the effort in order to provide a safe settlement asset in order to ensure financial stability. I think that's the kind of question I think a lot of the central banks are sort of thinking hard about, but there's not necessarily one answer. I think really that depends on specific sort of country situations. So I think when we think about tokenization of money and assets, I think that's probably a bit more far into the future. When you asked earlier, when we thinking about whether it's interlinking or developing interlinking fast payment systems or it's to connect central bank digital currencies. I don't think these are exclusive sort of effort. I think you can do both. Actually, a lot of central banks are thinking about doing both, right? But the timeline is probably different in the sense that you can interlink fast payment systems probably in the sort of more like in the next 2 or 3 years time horizon, whereas connecting CBDCs, that's probably beyond 5 years. It's more like 10-year time horizon type of project, but you have to start thinking about it now if you want to have a different or more competitive landscape in 10 years' time, right?
Yeah. I think that's a very good point to think about the horizons. And a couple of people independently, when I was doing the research for this report, said, there's the old adage of you overestimate what you can do in 1 year and underestimate what's possible in 10 years. And I think just on the point of the interlinking of CBDCs, I was very struck by the result. Last year, we had 31% central banks pick that as their top choice for improving cross-border payments. That's down to 13% this year, just quite a sharp decline considering there's been some positive developments. Agora been announced and so on. And I wonder, we had a question from the audience about this as well, so I'd be interested in your thoughts on that, what you might have seen. But I wonder if it is just about, as people start to work in it, they get a clearer image of the challenges and, what it's actually going to entail. And it feels further away than it used to because the journey is clearer, but it's a long one. Interested in, whoever wants to jump in on that. Maybe you, Jennifer, were nodding along. I can pick on you.
Well, I can't speak to
Sure.
I can't speak to those results and what's really going on. But I think, this conversation was just making me, think again about, you can't underestimate the learning curve that exists with this technology and the fact that it is evolving so quickly. And DLT is not new technology. I mean, we know it's been around, but to really understand all of the possibilities, all of the details, all of the risks, all of the challenges, that I think is really, it's an uphill battle, I think, for the financial regulatory community. And that's where it's really important to have public and private sector, working together so that we in the public sector get the benefit of the research and innovation that's going on, and to help us really understand what it is. And I just think you can underestimate that. So maybe you're right, Louis, that people are realizing like how complicated things could be. But I think that's it's just really important to understand how necessary those conversations and engagement are. And I think Agora is a good example of where you bringing people together in public and private sector, and you will have, definitely have benefits in learning there.
Yeah, yeah. Anyone else want to opine on the connecting CBDCs point? Or I was going to ask about, we had another question from the audience on stablecoins. So Dong, you were talking about cash on ledger and the importance of that. And I think although interconnecting CBDCs is a pretty speculative concept at this stage, stablecoins exist right now, and we have Rahul Bhargava from Aviate pointing out that they're creating a wallet share in emerging markets, and I'm wondering what the officials, what your kind of response to that development is. How much of it is a risk, and or are we kind of benefiting from the proliferation of new solutions there? And Don, please, and I'll share a survey result that relates to it.
Sure. So I think the FSB actually published a couple of reports that are really relevant to this question. One is, of course, a high-level set of recommendations on how to ensure that global stablecoins are safe and sound, right? So well-regulated stablecoins can play a role in the future payment landscape. I think that's one probably point that we can make. But being well-regulated is a tall order, right? We are talking about having a very safe stablecoin that's not going to be subject to run risks. And there are very rigorous arrangements to ensure that customer claims are honored in all sorts of circumstances. So it's not an easy task to achieve. But if we have a well-regulated stablecoin, I can see that it can complement the wholesale CBDC, retail CBDC, or tokenized deposits. In a way, we already have that in the current setup, right? We have, for example, in the modern monetary system, we have central bank money as the monetary base. And then, you can think about this as an inverted pyramid. And then in the middle part of that, we have commercial bank deposits. And leverage on commercial bank deposits, we actually have e-money schemes in many countries. So these e-monies are issued by non-banks. And they serve various purposes. In some countries, it's very important. For example, in China, in East Asia, we have very successful, very large e-money schemes. And of course, in Africa as well, in M-Pesa. So you can think about well-regulated stablecoins as sort of the equivalent of these e-money schemes in a tokenized world. If we use the earlier analogy of how, thinking about how do we think, the tokenized world, we have two-tier systems, and these well-regulated stablecoins can be part of that system. But again, there are important risks. I think we have to recognize, and I think the judgment so far, there are very few stablecoins out there that are that meet the requirements of being a well-regulated stablecoin. But I think conceptually we should not rule that out. Thank you.
Yeah, some very interesting points there. The survey result I wanted to share was about two things. One, the pretty high proportion, 44% of central banks in the survey said that they wanted to extend RTGS access to non-bank payment service providers, and 30% said that they intended to make their RTGS systems compatible with DLT infrastructure. And I think taken together, that suggests that there is a potential avenue for stable coins to kind of be more integrated into our into payments landscape, mostly domestically, I think, but I think that'll be an interesting trend to keep an eye on. Jennifer, any thoughts on the stablecoin regulation question? All right. Is there anything to add there?
No, I think Dong covered it. I would only add that the stable coins are being adopted around the world for all of the reasons he cited, especially in the more developing part of the world. And so the market is signaling what it wants here, right? And it's up to us as technology and policy people to move in the direction the market is telling us, that the people are telling us.
Yeah, absolutely. We have a couple more questions from the audience, so I'm just going to get through a couple of those because we've got about 14 minutes left, so it'd be good to touch on some of these before I give you a chance to wind up. So please do feel free to jump in on whichever of these piques your interest. We've got a question, an anonymous question here on how we could achieve the G20 targets for cross-border payments by reducing the delays on the beneficiary leg. I think we often talk about settlement challenges, but a lot of the problems are actually in the beneficiary leg. So yeah, thoughts there.
Well, it's really, I mean, I think Don will have thoughts on this as well, but it's really the issues that we've already covered. I mean, it's the various drivers, the sort of the legal, regulatory, supervisory issues in particular that are, create delays in the beneficiary leg. And it's the need really to make sure the payments are safe and to implement AML CFT controls and sanctions controls. So along with potentially, capital controls. So we know that those things are important, but also create, inefficiencies. So it's the things I mentioned earlier in terms of trying to figure out how to align those in a better way to find greater efficiencies. So improve implementation, but also, support a sort of a faster settlement. And that work is ongoing. As I said, we're going to issue recommendations on data frameworks in particular, hopefully, later this year. And going forward, there's a lot of work that we have planned that relates to sort of data presentation related to sanctions lists. I mentioned the FATF work on the payment side that I think is really critical. It's a foundational piece that is ongoing and hopefully will complete in the near future. So a lot of those pieces could come together in the next year. And of course, it's important for us to focus on the implementation of all of those. And so we do have a lot of work to do, but we are very focused on this issue that has been raised by the person that asked the question.
Yeah, I totally agree with Jennifer. I think actually we are working together with FSB Secretariat and trying to understand what are the main frictions in the beneficiary leg. I think here the question is that I think, first of all, a recognition that there are frictions in the beneficiary leg by the respective countries. I think that's already important, right? If you know that your country is actually the recipients of your corporates, your households are not getting the money they're entitled to as fast as they can, then maybe that's something worth looking into it, right? And it does not say that all these regulations and compliance checks are not necessary. It's rather saying that maybe countries can also look at how these are being implemented. Is there room for efficiency improvement? Because that's good for everybody, right? So this sort of exercise, I think, just highlighting the problems, raising awareness is an important step already. But the next one is to see whether there are rooms for improvement in the use of technology, either in the traditional sort of legacy systems or in more tokenized settings. All these are possible avenues, and we're looking at those. And we hope certainly to work with countries to reduce some of those frictions.
And I just want to add something that Dong mentioned at sort of the top of the discussion was really, what we've learned in the last couple of years of gathering data for the roadmap to measure our progress, is that there is a lot of variation across countries and across corridors. And so we're at the moment now where we feel that it's important to really focus in on some of those corridors and countries where we see that there's more progress to be made, and understand are there specific and bespoke type issues that are going on in those countries and corridors that we can try to support them on. And of course, this is important work that the IMF and the World Bank do, but at the sort of roadmap level and the FSB, we think this is an important strategic direction that we need to take, is looking, at specific corridors and countries and trying to figure out what are the things there that we might unlock that could show progress.
Yeah, absolutely. Thanks, both of you. Another question which I may relate to that, from Rahul Bhargava from AV8 again. Are real-time screening, AML, CFT controls, and operations evolving at pace with cross-border real-time processing, including faster payment system interlinking? And will weakest link challenges persist in long-tail FIs? Are we? I guess the weakest link challenge relating to is it going to be the beneficiary? Like, where will as we kind of work at improving or reducing various frictions in the cross-border payment system, where do you think the weakest link challenge is going to be at this point?
I don't know if I would frame it as weakest link. I'm not sure. I mean, like I said, we see sort of these systemic issues across like the whole payment chain in terms of what has to be done, what checks have to be done, and what the delays or costs could be. But I do think when we think about interlinking, and as we're working on getting payments faster, we know that we also potentially have risks that emerge, like fraud risk, that we need to think about solutions for. And I think the question is, are those systems evolving as quickly as potentially interlinking? I mean, I think those are good questions to raise, because as we know, as we are going to get better at cross-border payments, we need to be better at, anti-fraud and those kinds of things that could potentially grow. So it's a good question. I don't know that I can, definitively say yes, they're evolving at the same pace.
We'll see. Sorry, Tom, please.
No, just very briefly, I think certainly I agree with Jennifer. I think the main approach here is to think about what is a risk-based approach, right? So in the sense that there has to be some judgment about the kind of risks we're talking about, and then the way you deal with such risks might be adjusted accordingly. And that's been a challenge, I think, in terms of real-time sort of monitoring versus pre-validation stage. I think it has to be a combination, in some segments. Maybe of course it's important to pre-validate the identities of transacting parties, whereas in other, maybe smaller, less risky transactions, you could have somewhat lower sort of requirements in terms of identification but real-time monitoring and all this would certainly play an important role. I think all of these approaches would be useful. It's a matter of how to, what's the combination of different techniques for you to deal with the risks at hand. So a risk-based approach would be the right one, but implementation is not easy. It's challenging as well.
Yeah, I agree. The top to bottom real time would be very, very hard to do. Major corporates all the way down to individuals, across the world in real time. I don't know that that's a tractable problem, but a tiered set of approaches, with identified parties and large, well-regulated entities at one level and sizes of transactions and all of that down the list, that could be implemented. And you can see, again, we're a DLT company, so I'm going to talk about it, but you can imagine situations where, it has to go through a lot of links, but in a DLT implementation, the identity information and validation was embedded in the payment contract, if you will, as it went down the line. And that can be handled one way, perhaps a faster, lower cost way, than one where somebody that the system has never met before is receiving, the equivalent of $10,000, and somebody needs to go check on this.
Yeah, I think that's really interesting. Well, it will be interesting to see at what level DLT I guess people often talk about it as the settlement architecture, but there's a lot of different information being exchanged, and what is going to be on the chain, and what's going to be within the MLCFT controls, etc.
Or what might need to be chain linked between two different chains. You can imagine a DLT implementation in one regulatory and payment regime and another one, and it's the interlink of the two where that information had to pass, right? It's unlikely that there's going to be one blockchain to rule them all. That's just not how the technology is going to evolve.
Yeah. Excellent point. We're running short of time, so perhaps just any quick thoughts you have for Dan Feeney from Feeney FinTech on thoughts on the potential of open banking for pay by bank, and the importance of data sharing schemes there. I know that at the moment that's a lot of it is domestic, but I think the long-term view is probably that this will be a cross-border solution eventually. And interested in your thoughts on that.
Well, and I'll just offer, you're right. I mean, a lot of it is domestic. And so that was a major consideration as we were thinking about data frameworks. Since our focus is cross-border payments, we didn't delve so much into open banking, but the potential is clearly there. I think it's a question of monitoring and sort of keeping up with how it's developing in various jurisdictions to understand, what the possibilities might be cross-border.
Yeah, absolutely. And anything from Dong or Zane? Well, in that case, I'll give you a chance to offer any final thoughts you have for the readers before we wind up. Zane, if you'd like to kick that off.
I believe that in what Dong framed of preserving the two-tiered system and then making it modern, and that here in the second tier, working with banks, financial institutions, stablecoin providers, e-money regimes, DLT technology can provide a lot of the necessary technology and infrastructure solutions to the regulatory and compliance challenges that Jennifer put forth, as long as there are clear rules for all of us to follow in each of these jurisdictions, or I'll call them transaction regimes. The technology is there and ready to go, and companies like ours are ready to do it.
Fantastic. And Dong, should we come to you next?
Sure. So I think this discussion has been very helpful. I enjoyed it and learned quite a bit from others. And I think the main message I would have is that cross-border payments are not easy. I think there are serious challenges, but we have made quite a lot of progress, particularly understanding what are the issues, right? A data situation. The next, we really need concerted effort. I think technology and the future forward-looking solutions do provide a very good opportunity, just as highlighted by Zane. But there are other headwinds going on, right? This is a era of heightened also geopolitical tensions and all that. So I think it's all the more important for countries to work together. We certainly hope that international collaboration will still be the spirit in guiding the work in cross-border payments. Thank you.
Yes, absolutely. Very important point there. Jennifer, final thoughts from you, please.
Well, just to build on what Dong said, I think the G20 roadmap does give us a great foundation for really being able to focus on specific pain points, for lack of a better word. And, it's really our hope that the work that we're going to do on legal, regulatory, supervisory issues that really apply in the short term to the traditional systems, it can be applied to interlinking, of systems that occurs later, to apply to tokenization environments or tokenized environments that might develop over the longer term. So hopefully the work we're doing is not just for the short term and the immediate, but really has relevance going forward as well.
Certainly. Well, the report is called Future of Payments, so we hope so too. Thank you very much, everyone. We'll have to wind up there. So apologies if we didn't get to your question. But thank you so much for sending them in. Thank you all for listening. Thank you particularly to my panelists. Thanks, Jennifer. Thank you, Dong. Thank you, Zane. It's been great to have you and your insights. Thanks to the sponsors of the report. So thank you, Zane at TASA, and thank you to IASPEC, who weren't able to make it today. For any of our European listeners, we have an event coming up in Frankfurt exploring these topics, but with a more European flavor on December 3rd. So you can find out about that on our website. It'll be very interesting, although I won't be there myself, but my colleagues will. So please do have a look and register your interest for that if you're a member. And I think that is everything. Please download the report, have a look, share your thoughts with us. Keep an eye on our website for more upcoming events and content on this area. And yeah, thank you for coming today. And thank you once again to my panelists.
Thank you.
Thank you.